We have this thing with gold exposure, not much more than 1%, if that. I mean, that's got to get up to 2, 3, 4, 5%. Where's it going to come from? Well, the answer basically, we're seeing already with, as I described earlier, the dollar is trade weighted is going into a death cross, while at the same time, gold is, it's found support at its 55-day moving average, and it's knocking on new high ground. I mean, it's fascinating how the buyers are in there at $2,500, and they try and cap it at $2,525 to 30. It's going to break out of there, and when it breaks out of there, it'll probably run very, very quickly. So, we are on the cusp of something, I think, very, very interesting as far as gold as a whole is concerned.
According to industry experts and recent market data, the precious metals market is showing signs of a potential breakout, with both silver and gold positioned for significant price movements. Silver has been in a supply deficit for 4 consecutive years, reaching 184.3 million ounces in 2023, despite a 30% reduction from the previous year. Global silver supply has remained relatively stable at around 1 billion ounces annually. Still, industrial demand surged 11% last year to a record 654.4 million ounces, mainly driven by the green economy sector. Alasdair Macleod, a prominent financial analyst and head of research at Goldmoney, believes that silver prices could potentially double from current levels. He points to the persistent supply deficit and increasing industrial demand as key factors supporting this bullish outlook. The gold-to-silver ratio is expected to fall from around 83 and 84 to below 60, Macleod predicts, suggesting that silver may outperform gold shortly. This sentiment is echoed by Sprott Money, which argues that a silver breakout is imminent due to its current undervaluation relative to gold. Using a median gold-silver ratio of 80 to 1, they calculate that a gold price of $2,300 would imply a silver price of $28.75. While gold at $2,500 would correspond to $160.50 silver at $31.25. Meanwhile, the gold market is also showing strength. Macleod notes that gold is finding support at its 55-day moving average and testing new highs, with resistance around $2,525 to $2,530. He anticipates a breakout above these levels soon. Recent market activity supports this view, with gold retaining key near-term support levels and attempting to rally above $2,528.93. The next significant resistance level is $2,530, which coincides with the all-time high and the upper boundary of the current trend channel. Beyond this, the $2,600 mark looms as a psychological barrier. Please tune in for our exploration of Alasdair Macleod's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
He might sort of think it's a good idea to buy gold, but he's got a problem because physical gold, is not a regulated investment. And he will have his compliance officer down on his back if he goes out and buys gold. Why are you doing this? Do you realize that this is not a regulated investment, et cetera, et cetera? You can see that they tend to steer clear of it. Now, they can get around this by ETFs. And so far, basically, ETFs, the flow in ETFs in the West has been basically sell, sell, sell. And, there's signs it's stabilizing, but they're not really buying ETFs. And then there are mines. And mines are, fascinating because there's been no research really conducted by the big houses. They've all cut back on their mine research. So that's going to be a dramatic market. But, we have this thing with gold exposure, not much more than 1%, if that. I mean, that's got to get up to 2, 3, 4, 5%. Where's it going to come from? Well, the answer basically, we're seeing already with, as I described earlier, the dollar is trade weighted is going into a death cross, while at the same time, gold is, it's found support at its 55-day moving average, and it's knocking on new high ground. I mean, it's fascinating how the buyers are in there at $2,500, and they try and cap it at $2,525 to 30. It's going to break out of there, and when it breaks out of there, it'll probably run very, very quickly. So, we are on the cusp of something, I think, very, very interesting as far as gold as a whole is concerned. Now, as far as silver is concerned, that is also very interesting, but for rather different reasons. There was, various people picked up on a story that Samsung have got a new solid-state battery which uses silver and not that very, very dangerous lithium. It's got the range. It's not so heavy. I mean, it's got everything to recommend it. Rapid charging, yeah. I mean, it's just incredible. You can get something like 600 miles in 10 minutes charge. I mean, whatever the figures are. I mean, that makes the whole of the EV thing sensible. But there isn't the infrastructure to cover those huge charging currents. That's going to take time to put in. But nonetheless, China will copy Samsung. They will have the same technology very, very rapidly. They will put in the infrastructure. And we'll be finding that these Chinese cars, even with a 100% tariff, are fiercely competitive compared with anything coming out of anywhere else. This is the reality of the situation. It's going to mean that silver, which has been in supply deficit for the last 4 years, according to the Silver Institute, silver has got the potential, really, I think, to easily double from here. Whether it does or not, we'll see. But you can see that with a rising gold price, silver is likely to rise very rapidly as well. And I think the gold-silver ratio will fall from current, 83, 84, whatever it is, easily down to below 60 on what is developing, a mixture of the monetary situation with the collapse in credit and, physical demand for silver, mainly from Asia, which is where all the action is.
Gold prices soared unprecedentedly on Monday, marking the 7th consecutive session of record highs. This remarkable rally comes amid increased central bank purchases and ongoing geopolitical tensions, with even robust economic data failing to dampen the precious metals' appeal. China's central bank, the People's Bank of China, reported adding 160,000 troy ounces of gold to its reserves in March, continuing a trend of steady accumulation. This move aligns with similar actions by other nations, including Turkey, India, Kazakhstan, and several Eastern European countries, which have been actively increasing their gold holdings this year. Alasdair Macleod points out that central banks increasingly view gold as money rather than credit, starkly contrasting their perception of the US dollar. This shift in perspective is driving a renewed interest in gold as a reserve asset. Central banks understand what we're talking about, Macleod explains. They want to get out of dollars and into gold because they know that gold is money and dollars are credit. The enthusiasm for gold isn't limited to central banks. Physical gold demand in China has rebounded to pre-pandemic levels, indicating a broader interest in the precious metal across the world's second-largest economy. Let's get back to the interview.
It's precisely, as I've always maintained, it's not a question of gold going up, it's a question of paper currencies going down. And that continues to be the background to it. But there are other factors. You've got a very, very strong savings, what's the word I'm looking for? Savings ethos, if you like, in China, where households put aside on average something like 35% of their income. I mean, that's huge, $6 trillion. And you've got to think where that's going to go. It can't go into foreign currencies if they wanted to. Property markets shut off, and it's going into bank accounts. The same banks who, by regulation, are required to offer gold accounts to their customers. I mean, there's a minimum amount you put in, but the minimum amount is less than $100. So I would expect to see more and more of those gold accounts, just accumulating. And the banks which run them, these are not allocated accounts by any stretch of the imagination. They're unallocated accounts, but it does mean that the banks that offer them have got to have some decent gold cover. So they're in the market getting what they can. So that's keeping things short. Central banks understand what we're talking about. They won't admit it, but they do understand what we're talking about. And they want to get out of dollars and get into gold because they know that gold is money and dollars are credit. And what's happening to credit? The value of that credit is bound up in the faith, if you like, and trust in the US government. What's happening to that trust? I mean, that answers the question, the relationship between credit and money. On top of that, I think that the situation, if you like, of investing institutions in financial markets is very, very interesting. When I first became a stockbroker, it was normal to have an exposure of roughly 10% to 15% of your assets in gold, or gold proxies, I mean mining shares or something like that. This was the protection, if you like. And indeed, if you go back to the 30s, they would say that a gentleman's portfolio was comprised of gilts and gold. No equities in there at all. Now, we've moved away from that. And I think that the average exposure, if you take the entire investment management industry, exposure to gold is probably not much more than 1%. As things develop, and you've got this huge, great valuation disparity between the S&P and bond yields, that I think in a recession is going to close, and it's not going to close by bond yields falling. It's going to close by equity prices falling, and we're seeing sort of a few shaky things happening recently.
As gold continues its record-breaking run, investors and analysts are closely watching for signs of how long this rally might last and what implications it may have for the broader financial landscape. With central banks leading the charge and individual investors following suit, the gold market appears poised for continued interest and potential growth in the near term. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.